Michael Saylor, welcome back to the show.
Happy to be here.
It is very good to have you. Now, at the time of recording, Bitcoin is over 100K and has been for quite a while at this point. So I think the question of is Bitcoin real is dead. But now the question becomes, how does Bitcoin go from where we're at a little over 100K to the 13 million a coin that you consider the base case?
Yeah, I think I've always said it's either something or it's nothing. If it's embraced as an institutional asset, if it's legitimized as an asset, then it's not going to zero. And if it's not going to zero, it's going to 1 million. And I think the short answer to your question is education. And with education comes adoption. And at this point, you just have 95% of the world that still doesn't quite understand what it is. And that means, I mean, the way Bitcoin marches from 100,000 to 13 million, and by that's for your listeners, you're referring to my long-term forecast. I gave that forecast in Nashville in July of this year, and it's based upon the Bitcoin 24 model. So the Bitcoin 24 model is an open source macro model of Bitcoin adoption and macroeconomic development over the next 21 years. Anybody can go to Google and they can Google Bitcoin 24. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now. And I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now, BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin. And they're seeing the ETFs like IBIT. And they're noticing that these are the most successful ETFs in the history of the world. And BlackRock has got the most successful ETF ever launched. And now they're seeing the world's largest money manager, BlackRock, with more than $11 trillion of money managed. They're seeing them publish scholarly, thoughtful, responsible white papers on portfolio allocation. And instead of the 60-40 model with 60% equity and 40% bonds, now you've got 2% that they're saying you might want to put into a crypto asset like Bitcoin. So I think that you've got that group of people that are finding it. I also think you've got institutional investors that are moving into Bitcoin more frequently now. A lot of them are big investors in MicroStrategy. A lot of them trade MicroStrategy options. MicroStrategy has been the most successful stock in the S&P index. We're not in the S&P, but we're more successful than all 500 S&P companies for the past 4 years. I think this year too. So we're getting the attention of mainstream investors. And that's bringing a set of new investors to the asset class because when they buy our stock, we buy Bitcoin with it. I think the third driver is a bunch of Bitcoin standard companies. A lot of companies are recapitalizing their balance sheets on Bitcoin. MicroStrategy was the first, but Mara has done it, M-A-R-A, and Riot just announced they're doing it, R-I-O-T. And the most successful company in the Japanese stock market this year is Metaplanet, and they just did it. And Similar Scientific just did it, and they tripled their stock in very short order. So you've got like a half dozen companies that are recapitalizing to the Bitcoin standard, but you've got 60 companies that have Bitcoin, and there's a lot of companies that are getting more heavily involved. I think recently Hut 8 announced, Hut, H-U-T. And then Rumble, R-U-M, And so a bunch of public companies that are kind of, they're innovators, and they've got a fairly open mind, and they're flexible. And the really important thing about that, Tom, is when a public company adopts Bitcoin, they start sweeping their cash flows into it. But then after that, they may start issuing equity. And then after that, they can borrow money. So Riot just this week issued a $500 million convertible bond, and then they bought Bitcoin with it. And Mara—
Is this Riot Games?
No, Riot Bitcoin mining.
Got it.
RIOT, Riot. And so Mara did the same thing. They did a $1 billion convertible bond deal, and they bought Bitcoin. And then they did another $850 million bond deal 2 weeks later. And MicroStrategy, when we announced we were going to pursue a Bitcoin treasury company model, we announced that October 30th of just this year. And we've raised, something in the range of $15 billion in the last 6 weeks. And so you're talking about large sums of money that are flowing. I mean, much larger sums. It took us 30 years to accumulate $500 million in order to buy Bitcoin in 2020. It took us 4 years to accumulate $10 billion. And we bought Bitcoin over the next 4 years. But then it took us like 4 weeks or 5 weeks to accumulate the next 15 billion. So you would check off that box, which is company adoption. Then after that, you've got like institutional adoption, the endowments and the pension funds. There's now pension funds that are starting to allocate to Bitcoin, and there'll be big university endowments and 501c3s and insurance companies. And so that's another driver. And then you've got nation states. And of course, the news of the week is the United States Strategic Bitcoin Reserve. And the US already has about 1% of the Bitcoin. If they don't sell it, that's a big deal. And Donald Trump said, never sell your Bitcoin. And then he was elected president. But now you have Senator Cynthia Lummis advocating for a US Strategic Bitcoin Reserve. You have a very supportive cabinet, lots of cabinet members that have been pro-Bitcoin. And then Senator Lummis just posted a tweet just a few hours ago, having met with the incoming Secretary of the Treasury, Scott Bessent, saying that she looks forward to working with him on this. And presumably that means that he is also supportive. And we know that the Trump White House and Trump is supportive. He was asked on the New York Stock Exchange floor, I think yesterday, by Jim Cramer about it, will you do something like this? And he said, I think so. I think we need to lead. So I think that that's also positive. So let's just say there's a lot of different entities in the world with capital. I mean, who doesn't want to keep their money? Who doesn't want more money? Right? Everybody wants to either keep their money or they could use more money. And so Bitcoin is digital money. It's the greatest digital monetary network in the world, but maybe it's the first example of what I call digital capital. It's money, just so I can help people not be confused. Money is a generic term, but it decomposes in the modern world into two elements: currency and capital. Currency is the dollar and the peso and the euro. That is the medium of exchange asset. It is designated legal tender. That means you can swap it without paying a tax bill on it. And it means it's liquid and fungible, and probably it's good for paying taxes, and everybody prices things in it. That's not going to change. The world reserve currency is the dollar. The dollar's been the world reserve currency since just after World War I, and in different forms. The dollar is getting stronger, not weaker. But there's another aspect of money. It's store of value. If I had a liquid fungible asset that was a store of value that I could give to my children's children, well, nobody thinks that's the dollar, and nobody in the U.S. thinks it's the dollar. Rich people in the U.S. don't have 50% of their assets invested in dollar bills. And What they do think it is in the modern world is they think it's the S&P index, like the Vanguard 500 or SPY or some index fund, or maybe they think it's real estate. And real estate's a store of value, but it's not liquid and fungible. So it's a little bit different. It's difficult to swap it out in units of $1 million every day. And so it's not quite money, but it is capital in that regard. And gold for 5,000 years was kind of capital. It was a bar of gold bullion was that long-term store of value asset that people use. Bitcoin is emerging as digital capital. And people, they're not going to use it as a medium exchange to buy a cup of coffee. But if you want to buy something to give to your granddaughter that she can't mess up, even though she's 3 years old, and you just want, and you don't want to worry about it every day, and you don't want to trade it, and you don't want to worry about antitrust and whether or not there'll be rent control on the building or renting it out, you just buy her one Bitcoin and you put it in cold storage. And then 60 years from now, she'll be rich because the one Bitcoin will probably be worth 50 million or $100 million, right? And so that what's going on right now is the emergence of Bitcoin as a digital capital network for the world. And the thing driving it from 100,000 to 13 million over the next 21 years is the adoption of it as a capital asset by people that have the wealth, have the capital.
All right. A lot of people in my audience are not going to understand why you can't just store your money in dollars. I have a whole tirade about it, but I'd love to hear why. How do you explain to people why you can't just put your money in a bank account or under your mattress in dollars?
The simple answer is the supply of dollars expands about 7% a year, every year for the past 100 years. And what that means is that if you want to buy something that is a very scarce, desirable asset that the government can't make more of and that manufacturers can't make more of, if technology and capital and machinery and robots can't make more of it, it's scarce and desirable. Here's an example. An acre of beachfront property in Palm Beach, or a beachfront house in the Hamptons, or waterfront property in Miami Beach. That's a desirable place to live. You can't make more of it. And if you go back 100 years, you'll see that the value of that acre was $10,000. And you go forward 100 years, and that is about $10 million. And for those who are very quick at math, they'll realize that works out to 7% increase in price every year for 100 years. And that's why, that's why people buy houses for $100 million on the beach in Palm Beach. And my house, the house that I'm in right now, it was sold in 1930. And I have the deed on my wall. And it was sold for $100,000 in 1930. If you'd put that $100,000 in a vault and you kept it safe and sound for the 90 years, and if you took it out, it would pay about 8 to 12 weeks of my property tax on this house. Like you literally couldn't keep the house for 8 weeks. Go ahead.
Let me say it in my way. Tell me if this resonates with you. The reason that you can't store your money in cash is that the government steals your buying power by printing more of it. I find it's very sobering to look at it as theft. Does that resonate with you, or do you think I'm being hyperbolic?
No, you're correct. In essence, the inflation of the dollar supply means that your wealth is cut in half every 10 years if you hold all your wealth in cash. And it's the rule of 72, right? You divide 7% into 72. That's the half-life of the asset. So the half-life of your wealth is 10 years if you store it in cash. If someone gives you an asset you can invest in that goes up 7% a year, you're keeping up with inflation. You're not getting wealthier, but you're not getting poorer. You're just treading water, And if you're beating that hurdle rate, then you're getting a bit wealthier. So once you understand that, you can see that you can't preserve your wealth for long periods of time in a fiat currency. And the best fiat currency in the world, Tom, is the dollar. But in most other currencies, they inflate at 14% a year. And that means the half-life of your wealth is 5 years. But in a weak currency, like in Turkey or Syria or Iraq or Venezuela or Argentina, it used to be for 20 years, the inflation rate looks more like 28% a year or 30% a year. And we take example, the peso. The peso went from 1 peso to the dollar to 1,000 pesos to the dollar over 20 years.
Jesus.
Okay, so I don't, in America, you got to keep in mind, you're an American. You live in the greatest country of the last 100 years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed, In Russia, it crashed last time the Russian currency crashed in 98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, I mean, they didn't live through the Weimar Republic. They didn't live through the collapse of the current. By the way, the currency collapsed in Venezuela. It collapsed in Argentina. It collapsed in Brazil. It collapsed in Cuba. It collapsed in Russia. It collapsed in every single country in Africa. You see? And so foreigners actually get it a bit better, right? It's like the bank's going to take your money. The currency's going to zero. The government's going to promise you it'll be okay and tell you to put your money in the bank. Then they're going to inflate the currency, freeze your bank account, crash the currency, and then tell you it's worthless. That's what happened in Cyprus not too long ago, if you want to go and Google that. And so the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are 2 powerful promises for the first time in the history of the human race. No one ever gave you those 2 promises ever before now.
Yeah, the thing that, and a lot of this started with me getting to know you, researching cryptocurrency, realizing the just absolute devastation that even in America is happening with inflation, and understanding this difference that you're now talking about in a really clear fashion, that until I started researching you for this episode, I'd never heard you delineate it this way, that money is bifurcated into those 2 elements. You've got the money that you spend, cool, but then you've got the money that you're trying to preserve your wealth over time. When I tell people the way you should think about your house is not something that's going to go up in value over time. You should think of your house as something that you pay an insurance policy against, the upkeep, the property tax, as a way to match inflation, which is unless your area becomes disproportionately desirable, and that does happen. So like Austin went up in value because people just flooded into that area. But for the most part, what you're going to see is actually just keeping up with inflation, that as the dollar is devalued, it looks like the price and the value of your house is going up, but it's really not. Now,
I think that's fair, by the way. I think that's definitely a good way to think of it.
Yeah, I think so. My own company, when I start talking about this stuff, my employees look at me a little bit like I'm crazy because I'm so aggressive about getting people to understand, and it'll be very interesting to have this conversation with you, that ultimately the stock market is gambling. And once you understand that people have been forced to become gamblers based on inflation, that you have to find a way to outpace inflation, otherwise you lose your money. And the really smart among us look at the capital system, look at the equities market, and they go, oh, cool, I have a really complex way that I can find arbitrage basically in these moments where if I find an area of risk that I think I understand better than the next person, I can come in, I can buy that asset, it goes up in value compared to what I can sell it for down the road, and I'm able to sell it for a bigger win than inflation. And And that forces everyone to play that game or to just have their buying power stripped away from them, which of course is what happens to the vast majority of, call it normal to undereducated. They're just going to get eaten alive because they don't have the time, energy, or intellect to figure out this relatively complicated game. Okay, so with all of that as the structure of why even the average person should care about this to a screaming degree, there's an idea that you say, but you go by quickly, that I think if people understood, it's really going to help them. So you've said, I want to see the entire world recapitalize in Bitcoin. Now, when you say recapitalize, is what you mean, hey, that part of your wealth that you want to store to maintain purchasing power over time, all of that, instead of being in real estate, instead of being in treasuries, instead of being in equities, that should move over to Bitcoin. Is that what you mean?
Yeah, that's a good way to say it. Yeah, you've articulated that quite well. Yes, build your house on a firm foundation. Don't build it on sinking sand. Don't build it on a swamp. Build it on a granite rock, on schist. And I guess if I could give the math, the risk-free rate of the dollar, if you're capitalized on US dollars and you were to say buy treasury bonds, the risk-free rate is something close to SOFR, or the standard overnight funding rate. And, that ranges, but after you get paid that rate and you get taxed on it, you might get paid 5%, you get to keep 3% after tax. Maybe if you're tax-free, you get 4.5%, and if you're taxed, you get 3%. So the risk-free rate of return of your capital on that dollar standard is like in the 3% range.
We'll get back to my conversation with Michael Saylor in a moment, but first, let's talk about digital security. As the CEO of a media company, I am all too aware of how vulnerable our data is to cyber criminals. Just imagine, every piece of sensitive data you have is accessible through the internet right now. Your bank accounts, your private messages, your business plans, all of it. That's why I'm excited about NordVPN. With just one click, NordVPN creates a secure, encrypted tunnel for your data using the same military-grade encryption that cybersecurity experts trust. It makes information invisible to anyone who might try to access it. Here's an exclusive offer for our listeners. Go to nordvpn.com/impacttheory right now, and you'll get the best discount on NordVPN. Plus, they're throwing in 4 extra months free on the 2-year plan. And you can try it risk-free with Nord's 30-day money-back guarantee. That's Nord, NORDVPN.com/impacttheory. If you're running a SaaS company, you know the pain of security compliance. Getting certified with industry standards like SOC 2 isn't just expensive, it's a massive drain on your team's time and resources. That's where Vanta comes in. Vanta transforms this entire process. They automate your compliance work, cutting your costs by up to 85%, getting you audit ready in a fraction of the time. This isn't a Band-Aid solution. It's a complete system that evolves with your business, handling everything from ongoing compliance monitoring to security reviews. Over 7,000 companies, including Atlassian and Quora, trust Vanta to handle their compliance. They're proving their security works in real time, building customer trust and focusing on what matters, growing your business. Stop letting compliance slow you down. Head to vanta.com/theory and get $1,000 off. That's VANTA.com/theory. And now let's get back to my conversation with Michael Saylor.
The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I've got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30% plus the risk premium, plus the tax efficiency If you told me here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand, if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. The
Well, so
annualized
there, hold on,
return,
because there's a
right?
lot of assumptions in there. So I know a lot of people are clutching their pearls right now about Bitcoin being referred to as risk-free. So can you break down for us the difference between that volatility and then how you can have the confidence to look at this and say, no, 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 the risk is merely a timeline question? Because I think a lot of people will take exception to that.
Yeah. So, well, the dollar is zero ARR, zero volatility. That is to say, the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So, if you're on the dollar, you're living in flat land, and you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%. So like a decade. But you can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour, and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking, my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months if they just hold on to it, right? And so they're going to double it once, twice, 3, 4 times at that rate, right? The volatility
But this really
itself,
does come down to, sorry, and I'll let you get back to that,
yeah.
but this does come down to a belief that when you look into the future, that the setup that makes it have the 60% ARR is going to continue. Because I look at this and I say the only reason that it has that kind of reward is that it is volatile, that there are question marks. Because if there were no question marks, everyone would flood in near instantly. It would hit homeostasis, and that would be that. So I think Bitcoin is anything but risk-free. But I do think that the volatility is advantageous for the people who are going to be right if people are right about the upside. That's the most fair way to say it. Why do you think the best way to conceptualize this is as risk-free?
Howard Marks would say volatility is not risk. Volatility is volatility, right? A merry-go-round, or a carnival ride or a roller coaster is volatile. The risk part is if you fly off the roller coaster, right? If the merry-go-round stops working, etc. So the fundamental risk of Bitcoin is the existential risk of an extinction level event and Bitcoin, right? If space aliens come down and say, we're taking your Bitcoin away from you, right? Then I guess there's risk. If some evil genius finds a way to create a cyber virus that infects and destroys the Bitcoin network instantly, irrevocably, that is the risk. So, but that's kind of like that's the existential risk you take when you get on the airplane. If it crashes, that's the existential risk you take when you cross the street. That's the existential risk you take when you put a piece of food in your mouth. And I say, and you say, well, can you imagine that hurting me? And I say, yeah, if I put poison in the food, you're dead. Okay, so do you trust me? Do you trust the waiter when you put the food in your mouth, right? So yes, there is some risk in life. And the existential risk is that extinction level event.
You
After
don't
you
think there's another layer of risk in that, not existential, because you're saying the risk-free return of Bitcoin is 60%. But I think there is, it seems strange to me to not allocate some percentage of, maybe it doesn't grow that fast. Maybe it doesn't remain 60%. You yourself say over the next, 21 years, it's going to come down. It'll average out over about 29%. What if that accelerates and the return ends up being substantively less than that? So I get saying that this has a better chance of having a higher annual rate of return than, say, the S&P 500, which maybe we clock at 15%. We say, we might not hit 60%, but we're probably not going to drop below 15%. Therefore, if 15% is our hurdle rate, it's going to be something north of that. But I think where people trip up with your language is this idea of the inevitability of the 60%. What would you say to that?
So we're dealing with three concepts: risk, volatility, and performance. Okay, so I've addressed the risk issue by pointing out that there is existential risk in your given network or frame of reference. And I just want to make that point that once you understand that risk of being in that frame of reference, then you have to figure out what's the source of the volatility and the performance. And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random and you'll feel like the performance is risky. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And yeah, I don't know how it got there, but it's there. The water's chilly, it's clear. And I look down and there's a waterfall coming off the mountain lake. And the waterfall, it's very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility, right? And there's waterfall. And then I look at it. And now if you look and you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold, and leave. But let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, well, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo. I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley, and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics, and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? Well, I'm like, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, well, there's 500 trillion gallons, and I take out my calculator and 1 billion gallons or whatever. It's going to last a long time. Like, well, it's eventually going to run out. I say, well, the sun keeps shining on the ocean, and the ocean keeps lifting the water out of the ocean, and it drops it on this mountain. And that's why there's water in the mountain. But you're right. There's some kind of natural limit. And I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart, and it's a lot more than your steam, wood stove, and it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning, gasoline. So I'm an engineer, and you're seeing performance thinking it's random. And that's why it's going to stop. And you're seeing volatility and you're thinking it's random and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. It's a lower energy state. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt, right? They're invested in real estate in Cuba, in Venezuela, in Nigeria. They're sitting in a warehouse that's crumbling. It's got a 40-year life. And so entropy and inflation, you invested $100 billion in a war zone, and then a war broke out and your money got your asset got devalued. All of the things going on in the world, the war, the chaos, the competition, the inflation, the entropy, the passage of time, the hurricane, the COVID, vaccine, the COVID virus, all of these things impaired the value of your assets. The reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state. It is steam condensing to water, condensing to ice, giving off energy, just like in any chemistry lab, you would learn this. And at the same time, there's this volatility driver, Tom, which is you have an open capital market, and on Saturday night, when there's a missile crisis, someone can make a $10 billion short bet, levered up 100 to 1, and panic. And they can do it in Bitcoin. And then on Sunday morning, when the missile crisis has passed and nuclear war did not break out, they can go long and they can reverse the trade. And Bitcoin's the only asset where you can sell $1 billion of it in a minute at 100 to 1 leverage, and you can buy $1 billion back in a minute with 100 to 1 leverage on Saturday night and Sunday morning. If you could do that with your Upper East Side apartment, then property values in the Upper East Side would also be more volatile. And if you could do it with Picasso's, that would be more volatile. Because if people get drunk and they panic and they short your asset 100 to 1 and change their mind 6 hours later when they get up with the hangover, you're going to have volatility. So the volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view. And if it is that useful, then a Bloomberg jockey in Singapore is going to raise $20 billion in capital, and they're going to make it available for you to trade on Saturday night, or they're going to make $10 billion of credit available to you on Sunday morning because they're getting paid an obscene fee to do it. And once you understand the asset's appreciating because it is thermodynamically sound and it represents a lower, more efficient energy state for capital or for money. And once you understand it's volatile because the network is more useful and more leverageable, it is basically the number one. It is the number one source of credit or leverage in the world for everybody all the time. And once you understand it like that, you see the volatility and the performance are a feature of the engineering and the technology. They're not a happenstance. They're not accidental. They're going to continue in the same way that water will flow downhill. And, just like the normie that sees a fire and it's like, I'm going to harness the fire and I'm going to sell it. And the normie goes, well, what if the fire goes out? And the engineer goes, I'm actually going to create a machine, an internal combustion engine with 8 cylinders, and the fire's not going to go out. And don't you see how the 6-year-old Boy Scout, the fire goes out, and then Henry Ford creates a machine such that the fire doesn't go out. And when you get on a jet airplane and fly across the Atlantic for 12 hours, do you realize that your life depends upon the fire not going out in the jet engine, and you're surely dead? You will freeze to death before you happen to suffocate should that fire go out. And engineers solve that problem for you. And so the difference between fear and risk and anxiety and competence and commitment is understanding the physics and the engineering of the money involved.
Okay. I think treating it like physics is brilliant. I think the more we can get out of the metaphor into the reality, the better off we're going to be. So let me set the stage, and then I'm going to walk us through some of these beats of the non-metaphor version of this. So you just made a presentation to Microsoft to get them to recapitalize using Bitcoin, and they voted against it. So was 0.55% of people were for it. The rest were not. So when I listen to you, I often get the sense that you really have come to understand the nature of capital flows in a way, certainly as it integrates Bitcoin better than anybody else. And so I feel a bit like I'm talking to the future. So I really do want to map what you just said about it being the physics. I thought the waterfall analogy is really, really brilliant. I'm curious to see if you think this is if the waterfall is the better metaphor, or if a siphon cup is a better metaphor. So let me walk through what I'm understanding. So when you say high energy state of money, I assume you mean high entropy, that there's so much chaos happening. The goal would be to get out of a high chaos environment with inflation, money printing, all of the chaos that wreaks on one's ability to store capital. This is where, again, people need to differentiate between currency and capital. So we want to move that into what you're calling a low energy state, but it's basically there are fewer influences on it. It is going to be there. It has the volatility, which we'll get to in a minute, but in terms of a place to store your capital, once you're not in a short-term time horizon, you're in a longer-term time horizon, right. There are just less influences on it. So far, so good?
Yeah. So far,
okay.
So good.
So I think what makes that metaphor so powerful is that if I'm understanding you, I'm going to use a siphon metaphor instead of perhaps the more complete waterfall metaphor. I'm not sure yet. So let me use the siphon metaphor and see if I'm understanding where you're going. Here's what I read if I were going to make a bull case for why this is going to play out exactly like you're saying. I go, everybody who's awake and paying attention to capital markets is going to watch people get their 60% ARR year after year, after year, after year, after year. For people, I know you said the stats, but if people really understood what you did with MicroStrategies, taking it from a company where you're like, well, I guess this is dead, to being perhaps the most valuable stock on the stock market, insane. And we'll talk more in a minute about how you did that. But the siphon effect is capital paying attention. So it will first be smart capital who actually understand what's going on. They'll move first. This is obviously what we're seeing play out. Then all the adoption stacks that you walk people through. And then and this is why I say it's a siphon, it just gets to the point where you can't justify the money not going into it. And so now it's just you no longer need people to understand what's happening, just in the same way that there are bonds of water, there's sort of bonds of narrative about where one should be preserving their capital. And of course, people are still going to preserve their capital in buildings and in art to some extent. You've mapped this out for people. You estimate that, I think I have the exact numbers here, but there's a percentage of capital that people store into. So 450 trillion, this is rough numbers, 450 trillion in assets are held for utility. So buildings, things like that, it's not going to change. But there's 450 trillion that's long-term capital, pure store of value. And so the siphon becomes everyone will see over time that by moving out of this chaotic state where there's inflation, et cetera, down into the low energy state of Bitcoin where there is not, that over time, you will approximate, and I don't think you would ever say 100%, but just for simplicity, you will approximate 100% of that long-term store of value capital going to the most efficient, highest return place. And as of today, there's nothing even close to Bitcoin.
Yeah, I think that's reasonable to say. I mean, I'm not saying 100% of long-term capital becomes Bitcoin. What I'm really saying is long-term capital is like 450 trillion. I think there's 3% entropic lapse. There's 3% loss in that capital every year, either due to inflation or entropy, whether it's a financial asset or it's a physical asset. And that works out to 13 to $15 trillion a year of inefficiency. And that's just people or institutions owning things, and the building falls down, the company fails, right, et cetera. I think I would liken it to, well, I mean, all the water's in the lake, and all I got to do is carve a channel, and the water's going to flow downhill. And why? Because that's just the law of physics. If I took all your money, like, I don't know, how much of your money do you have stored in a bank in Africa right now, Tom? What percentage of your wealth? What if I took it?
Zero.
What if I took it all? What if I'm Dr. Evil and I took all your wealth and I moved it into a random bank in Africa? And then I said, hey, April Fool's, Tom, I moved your money here, but here's the key. You can leave it there or you can move it back to the US. Would you leave it there or might you move it back?
I would be moving it back.
Yeah. But so would I have to force you to move it back? I mean, wouldn't there be a natural tendency on your part to move the money to a place where you feel more secure with the money? Like, human nature is such that there's a lot of people in the world. Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so. Right? The reason there are capital controls, there's a limit of $50,000 a year, is because if people could, they would. So there's a natural tendency of people to want to move their capital from a less secure, more chaotic, more uncertain place, maybe where their property rights are less. I mean, you remember remember in Cuba when the boat people, when everybody wanted to leave Cuba and come to Florida, right? People generally want to move from the less secure to the more secure place. They want to move their person, they want to move their money, et cetera. It's human nature. I think if we come to this siphon analogy, well, there's just so much energy that gets released when you move from an uncertain, unsafe environment to a more certain, safer, more sound environment. That sometimes you don't have to convince people. Like, for example, a lot of times, if the head of the household could leave a war zone, don't you think they'd bring their entire family with them? Like, the kids might not want to go. My dad made me go to places I didn't want to go. You know why? When I was growing up, because his job. You know, how many children go to a place they don't want to go because their parents get a job? They're chasing money, Tom. So people, why did everybody come to the New World? Money. Everybody comes up with different ideas. It was all about property rights, and property rights was money. That's why the DuPonts came. That's why everybody came. So generally, you will find, why did people go west? Money. They went west for land. They went west for property. So if you come back to MicroStrategy stock, well, MicroStrategy capitalized on Bitcoin and our stock started working. So people started buying the stock, and it was volatile. Well, it's so volatile that we have $100 billion options market that's formed on top of our stock. So our company went from $1 billion market cap to $100 billion market cap in 4 years. Our options market went from zero to $100 billion in 4 years. Our volatility went from 20 or 15, very low vol, to 120. Okay, you can look at that as a negative or a positive, but here's the positive. 120 is like hot money. It's like fast RPM. It's only risk if the volatility comes from doing risky things, if it comes from gambling or doing stupid things. If I go into a casino and I play a game where the odds are against me and I'm winning, well, I'm also going to be volatile, but I'm volatile by taking risk, maybe stupid risk. But if I build a centrifuge or a flywheel and I spin it really hard, I might be volatile. It might look volatile to someone that doesn't understand polar geometries or doesn't understand physics, but it's not risk. It's just a machine that's creating motion or kinetic energy. So when MicroStrategy created that 120 vol, and to be clear for your listeners, to put that in perspective, if you stacked up all of the S&P 500 companies, 120 vol would mean you're the number one most volatile company in the S&P index. Okay.
And just to oversimplify here, or not even oversimplify it, but to state it as plainly as possible, it means that you are doing wild swings up and wild swings down very rapidly.
Yes. Yeah.
In price.
We're oscillating. We're oscillating, and maybe in an unpredictable way. It's like, like if I do this with a piece of balsa wood, it's like a kid's propeller toy, like it's a little toy, maybe those things that scare away the mosquitoes at your tropical barbecue. If I do this with a 5-pound weight, it's a weapon or a weed eater or a lawnmower or something, right? I mean, it's a piece of farm machinery. If I do this with $40 billion, it's a turbine. It might move your jet across the Atlantic Ocean, right? There's 15,000 pounds of thrust in a jet engine, but it's more like a turbine.
Why is it a turbine? What is the, God, this is where I don't know physics, but what is the energy output? Is it that money is moving from one person to another? I mean, that's all I think about when I think about volatility. You get one guy panics, he bought high, he sold low. And then the next guy comes in and buys low and sells high. And so one wins, one loses.
If I give you a stock option on the dollar bill and I say, Tom, the dollar bill is zero volatility, but I'm going to give you an option to buy 10 more dollar bills for $1 for the next year. Well, what is the option worth? It's nothing, right? Because the dollar is going to be worth $1. I mean, so a stock option with no volatility is worthless. The Black-Scholes equation is the conventional way to value a stock option. Suffice it to say, when the volatility goes to 15, there's a little bit of optionality. When it goes to 60, there's a lot of optionality. When it goes to 120, the option's exploding in value. And let me give you the practical value of it. If you had $1,000 or $1 million, let's say $1 million, you have $1 million in the bank. Well, with zero volatility, you can probably get paid SOFR. So you're getting paid 4% to take the risk of holding dollars in the bank. 4%. When you hold that money in the S&P index with the volatility of the VIX or 15, you might get paid 12 to 15% interest to take the risk of holding one share of SPY, the index. When you hold a share of Bitcoin via IBIT or a Bitcoin, the volatility is 60. You might get paid 70%, 80% to hold that $1 million in Bitcoin. And you're taking the downside risk, but you're getting paid that call rate. When you hold a share of MicroStrategy, if you were holding $1 million of MicroStrategy and you were selling the calls at the market with 120 vol, you could get paid 200% annual interest. You might not even know what it is. Like, you don't know what Bitcoin is. You don't know what MicroStrategy does. All you know is that if it's not going to zero in the next 12 months, someone will pay you 200% interest. So your break-even point is 6 months, right? It's like, if I can hold it for 6 months and it doesn't go to zero, I'm getting paid 200%. I'm getting paid my money back. My break-even point is 6 months on something I don't understand. There was an options trader on television today. He was saying, yeah, I mean, none of them really understand what MicroStrategy does, by the way. Like, understanding what we do takes an hour. Understanding what Bitcoin does takes 100 hours. They don't know that. Here's what they say. Well, the share of stock's about $400, and we just sold a $700 call option for $180 for 1 year. And so someone's going to pay us $180, and the worst case is MicroStrategy rallies and we'll double our money and we'll get taken out of the trade. But we're thinking that whatever it'll do, unless it gets cut in half immediately and goes south from there, even if it does get cut in half, we still made money, right? So this is indicative of your point, which is when there's enough performance and enough volatility, you don't just attract the smart money. You can attract the Bitcoin maxis, the people that have spent 1,000 hours, and their view is, hey, MicroStrategy's 2x Bitcoin, I'll buy it. Well, you might also attract the investors that say, hey, I don't know what it is, but it's up 120% a year for the past 4 years, so I might as well buy the hot thing. But you may attract the volatility traders. And they're like, well, I don't know what it is, but I trade volatility, and I need volatility. You can't trade dollar bills today for dollar bills in the future and make money off of that. So I guess it's akin to being, you're in a crowd and everybody starts surging toward an exit. You're going to go with them, or you're going to get trampled, or you get caught up in the crowd. And that's a dynamic. But to be clear, that's not what I endorse. What I would say is Bitcoin is the first perfect money, the first monetary instrument in the history of the world that is a properly engineered store of value. The second best money is gold, and the second best money has a half-life of 30 years, and the first best money has a half-life of forever. And so the first best is so much better. Of course, intelligent physicists, economists that understand physics, or capitalists that understand physics are going to discover that. And as they discover that, they're going to buy it and build an industry around it and recapitalize on it. And they're going to draw concentric circles of other investors I basically channel billions of dollars into the Bitcoin ecosystem, Tom, from investors that don't understand Bitcoin. They just want to do convertible arbitrage, or they want to do option trading. There are a lot of people that hate Bitcoin, and they come into the ecosystem because they just want to short my stock. So they short my stock and buy Bitcoin and create demand for Bitcoin, you see. So those are all secondary and tertiary investors. They have capital, they have money, and they want to play some game, whether it's short, long, trading, fixed income. People that have bought my bonds and they just wanted interest on the bonds, and they indirectly funded Bitcoin. So my company is an actor to recruit other investors. Anybody else in the ecosystem is recruiting other investors. But the fundamental physics of this equation is, this is the world's first perfect money. That's Bitcoin, the asset, and Bitcoin, the network, is the greatest global open capital network in the world. It is free digital capital, 24/7, 365. 1,500 crypto exchanges are plugged into it, and it is the number one source of credit, and capital access everywhere in the world right now. And so that's why it is performing. That's why it's attracting capital.
Okay. So what you've done with MicroStrategy, I think, is really fascinating. Let me explain it in a simplistic way. Tell me if this is accurate. what you guys have done is essentially replicate the financial markets with Bitcoin, which was, at least for a while, completely out of reach of institutional investors. So you could do calls, puts, bonds, like all kinds of financial instruments, but all with Bitcoin as the essential element. Is that correct?
We issue securities backed by Bitcoin, and the $500 trillion capital market I'm referring to, they have to buy securities. They need regulated options. They need regulated derivatives. They need regulated equity, or they need regulated fixed income securities. That means it has to come from a publicly traded, regulated company like MicroStrategy. And we are unique because we were the first company to build a large pool of Bitcoin as collateral. So if you actually accumulate $40 billion of Bitcoin, then you can issue these tranches of high performance equity or low risk fixed income instruments. And then all of the other traders, they can construct all of their various trades and all their derivatives based on those instruments. And they can do it on the NASDAQ or the CME or the New York Stock Exchange from their compliant institutions. And they could not buy Bitcoin, and they cannot trade on crypto exchanges. They can't trade on Durabit or Binance, and they can't trade offshore, and they can't hold the underlying commodity, either because it's illegal or because it's against their charter. And they promised their executives, their board of directors, and their limited partners and investors that they would only trade public company equity, options, fixed income, convertible bonds. So that's what they do. That's what they need in order to function. And what we do is we convert crypto capital, crude crypto capital, we convert it into refined traditional securities. And in the process, we strip away some of the volatility, we strip away some of the risk, we strip away some of the performance. And that stuff that we strip away, that they want stripped away, becomes leverage for our common stock, and we give it to the company and the common stock shareholders. That's how we outperform Bitcoin. And that's why we're more volatile than Bitcoin, because we took the volatility away from the fixed income investors that didn't want it, and we gave it to equity investors and derivative investors that need it. And we're just that gateway sitting in the middle, managing that.
Okay, so many people speculated that when the spot ETF was granted for Bitcoin, that MicroStrategy would not be relevant anymore, but that didn't come to pass. Why not?
Because the ETFs are SEC 40 companies. That makes them investment trusts. And so a trust company is a special vehicle. It's constructed to own an asset and hold it in trust and not do anything other than hold it. So if what you wanted to do was buy a bar of gold, you might want to buy GLD or IAU. Those are gold trusts. And they're allowed to take your money and they buy gold. And then the asset's dead money. It's a dead asset, just, well, let's say a stationary asset in custody, and you have the shares. And if you were to sell your shares or redeem them, they have to then sell the gold and give you your cash back. So think of them as like overnight depository banks. I could have $100 billion in that bank. It's overnight deposits. I invest it in gold or soybeans or oil. And then when you want to redeem, I sell the soybeans and the oil and the gold. I give you back your money. And I charge you 20 basis points fee every year. MicroStrategy is an operating company. We're regulated by the SEC 33 Act. An operating company can raise permanent capital. We can actually sell $1 billion of equity to take risk. And so if I sell $1 billion of equity and I buy $1 billion of Bitcoin, it's not an overnight deposit, it's a permanent investment. So you've got the equity forever and I've got the Bitcoin forever. You don't have a redemption right. You can't just show up and say, here, take my MicroStrategy shares back and give me cash. No, it's permanent equity. And I have the Bitcoin. So we don't have $40 billion of overnight deposits. I'm not a bank with $40 billion of somebody else's money that I got to give back, making 10 basis points a year. I'm a guy with $40 billion. It's mine. Okay, now if I'm a company or I'm an entity with $40 billion, I can go and I can borrow $3 billion from the convertible bond market for 5 years and agree to pay them 0% interest. But I have to pay back the $3 billion in 5 years in either equity or in cash. Okay, that's a risk they take. They give me the $3 billion. It's an obligation I take, and then I take the $3 billion. By the way, if I took the $3 billion and I bet it on black in a casino and I lost it, I took a stupid risk. I lost your money. The equity holders are hurting. I'm going to have to dilute the equity or come up with the $3 billion some other way, right? So I can do something irresponsible. You're trusting the management team of an operating company to not do stupid things. But let's say I take the $3 billion and I buy Bitcoin with it.
We'll get back to the show in just a moment, but first, let's talk about future-proofing your business. In business, your competition isn't just other companies, it's time itself. While everyone's arguing about bull markets and interest rates, leaders are busy seizing opportunities, and that is where NetSuite comes in. Over 38,000 businesses use it to see clearly in uncertain times. It's not just another business tool. It brings your entire operation into one powerful platform. Accounting, inventory, HR, financial management, all in one place. No more switching between systems, no more reconciling different reports, just crystal clear visibility that lets you seize opportunities instantly. While they're still closing their books from last month, you're planning next quarter's expansion. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/theory. The guide is free to you at netsuite.com/theory. Again, that's netsuite.com/theory.
And let's say you're an equity investor and you just gave me your money and you like Bitcoin. Well, what I just did was I just borrowed billions of dollars for free to buy the thing that you like. And if you think Bitcoin is going down, you're not owning my stock for a minute. You're not long my stock. The only people that are long my stock are people thinking Bitcoin is going up. So if you have any forecast for Bitcoin, whether you think it's going up 3%, 5%, 50%, 100%, all circumstances, it's smart for the company to borrow money for free and buy Bitcoin, right? It just doubles. It increases your performance. So operating companies, we can do things like I can borrow money from the convertible bond market, and I can sell when I do that, I'm basically posting shares that are trading, that are valued at 4 times the underlying Bitcoin that I own. So if I were to do $1 billion bond deal, I would be selling $1 billion of securities backed by $250 million of Bitcoin. I'd then buy $1 billion of Bitcoin. I would capture in the arbitrage $750 million of Bitcoin yield or Bitcoin gain. The beneficiary is the common stock shareholder, right? The guy that bought MSTR stock. So I'm doing I just generated $750 million in like 3 days, you see. So you're saying, what is it that I can do that a trust can't do? They can't make $750 million in 3 days. If I go sell $1 billion of equity and my equity is trading at 3 times the underlying asset, I'm selling $1 billion of equity backed by $333 million of Bitcoin, but I'm buying back $1 billion of Bitcoin and I'm capturing $666 million in the arbitrage. So if I were to go borrow $1 billion and just pay 6% interest on a junk bond, well, then you're just getting $1 billion of Bitcoin. And if Bitcoin goes up less than 6% a year, that was not a good risk. I would lose money on that. But if Bitcoin's going up 60% a year, I'm going to scrape a 54% yield and I'm going to make $540 million a year for my shareholders by taking that swap. So I just
All
gave
right,
you
really
three
fast. I want
things.
to anchor this down for
Yeah.
people. So, um, when I think about what the stock market is and why the rich get richer and the poor get poorer, a substantive part of this is that this is an extremely complicated game. That as many times as I've researched you and followed this, I'm just now beginning to put all the pieces together of how this all actually works. But there is this incredible opportunity that, like you said, if you've got somebody that really understands the economics and the physics of it all, there's an opportunity that's staring everybody in the face. You guys have built in a layer that the analogy that you use of turning crude crypto money into refined capital equities, excuse me, absolutely brilliant. And so you guys have set up what I think of, and you didn't say one way or the other if this felt right to you, but it continues to feel right to me, is you've taken a microcosm of the entire equities financial market, all the ways, my words, that people are able to bet on equities, and backed it by Bitcoin, allowing people this incredible, again, my words, casino layer on top of Bitcoin so that people can take the kind of risk that they're comfortable taking, that the governance bodies of their organizations force them to interface in that way. I mean, it's just absolutely brilliant. So now my question becomes, given the freakish success that you've had with this, that one, at least I look into the future and say, okay, this is going to keep going for a while. Were you shocked when Microsoft voted against, and I know you were not presenting them to do the full casino layer, my words, on top of the Bitcoin, but were you shocked that even just getting them to think of recapitalizing in Bitcoin was so soundly rejected? Did you just look at that and say, they're stupid, they don't get it? Like, what's happening?
We say in Bitcoin that Bitcoin's on a need-to-know basis. So the people that get Bitcoin because they need to. If you're wet, freezing to death, and you walk past a fire, you're going to stop, throw a log on the fire, and you're going to dry your clothes because otherwise you're going to freeze to death. You have a need to know it. If, on the other hand, you're a rich man and you have, a massive ski chalet in Aspen with 10 people working for you and modern heating and air conditioning and a chef, and 3 cars and a helicopter in the back, and you've got a dinner party planned and you're walking past a little flickering fire, you're probably going to think I should put it out. I'm probably going to step on that fire because it looks like a threat to me. Microsoft is probably one of the 5 most successful companies in the world out of 50,000 publicly traded companies and 400 million private companies. They're not exactly the shivering, naked, starving dude running through the forest on the mountainside, right? They don't need it. It's quite optional for them, right? The people that discover Bitcoin are when you live in Nigeria and the bank or Lebanon and the bank freezes your assets and you're either going to starve to death and be bankrupt or you're going to have learned about Bitcoin, they have a need to know. If you live in a hyperinflating economy in Russia or in Venezuela or in Argentina, you're going to know. If you remember your family fleeing Nazi Germany in the 30s and losing everything, if that story's been told to you by your grandfather or your great grandmother, right, then that resonates and you think, yeah, I think I'd like to be able to flee with my money, when the government goes bad on me. So I think that the message of this is shareholders in a well-run public company do whatever management tells them because they're not looking to pick a fight. And if you're an affluent investor in the first world, you're ingrained in your conventional wisdom and you don't have a need to know. It's not that you're not smart. I mean, the world's full of very charismatic and brilliant, hardworking, rich powerful people, that is not the criteria for discovering a new technology. The analogy I give you here is Led Zeppelin. A bunch of teenagers and 20-somethings pick up electric guitars and they create Led Zeppelin and rock and roll. And there were probably some very genius classical musicians in Carnegie Hall around the same time. And if you ask the music critics what they thought, and the music professors what they thought, and the classical musicians what they thought, they would said, this will never amount to anything. This is bad for the society. Every generation gets a new set of technologies, right? You're a podcaster, but 60 years ago, it was Walter Cronkite and it was a different media thing. And 100 years before that, it was William Randolph Hearst and a different media thing. And so Bitcoin is an opportunity for the new generation. It is the people that embrace new technology. They're either the youth, the 20-something to 30-somethings at the beginning of their career that have everything to gain, nothing to lose, and no chance. By the way, no chance if they stick with conventional technology, right? It's like my advice to you is don't create symphonies. Mozart and Beethoven kind of did it. Piano, listen to Chopin. Between Chopin and Beethoven or Mozart, they kind of did most of the stuff people want to hear, right? And so if you really want to make a name for yourself, make fame and fortune, you pick the new technology, right? And then the other group of people that embrace new technology are people in a war zone, right? People dismiss, remember World War I, and we had horses and cavalry, and that doesn't work. And then people dismissed the Air Force. They court-martialed Billy Mitchell, I guess. Air power, that'll never mean anything. And then people stop dropping bombs on your head, and you become a believer in air power. And so I think the real phrase from Max Planck, and he said it in the history of science and the study of science, he said, science advances one funeral at a time. It's like the old guard doesn't have a need to know. They're going to reject it. The younger generation, they do have a need to know. And then people that are under duress, that are fighting for their life, they, maybe you'll start the war not believing in airplanes and believing that we should fight with horses, and swords, but you won't end the war with a general that believes that, right? You'll replace the first general with the next general. You'll scramble to embrace the new technology, and the side that embraces the new technology is going to win. The side that channels power most effectively is the winner. That's the story of history. But the other story of history is the people that got to where they are with a different technique, they become entrenched in that technique. That's part of their self-image. Look, you're the world's greatest piano player, and someone invents an electric guitar, and you're 70 years old, and they say, what do you think of the electric guitar? And you're like, it's a brutish instrument, for long-haired hippies.
When I talk to people that really understand Bitcoin, you go deep into those rabbit holes. You start getting people talking about how do we secure the network when we mine the last coin. So what's your take on that? How are we going to secure it?
Well, the network reward is a function of the block rewards of the miners, and they will continue between now and the year 2140. And the transaction fees. And the transaction fee economy is an open free market economy. If you want your transaction to be processed in the next 10 minutes, you have to be the high bidder. And there's only 5,000 slots. And so the most important 5,000 transactions in the world are going to get to the top of the queue based upon the transaction fee of the broadcaster. This is why it's important to have scarce block space, because as long as the block space is scarce, the transaction fees will trend up over time. And as more people want to do more transactions, they will bid up the transaction fees. And right now, they're a small fraction of the rewards, but I think 10 years from now, they'll be the majority of the rewards for sure. And I think by 2035 and onward, most of the revenue that comes from the miners will be based on transaction fees, and transaction fees are a durable business model forever. I mean, every real estate company, every financial service provider, they all work on transaction fees. I mean, it's fine. Like, I want to move $1 billion from point A to point B. Would I pay $10? Of course I would. Would I pay $100? Sure. If you wanted to buy $1 billion building and take clear title of it in Manhattan, what do you think the transaction fees are on that? Right? I mean, you could spend $1 million to move $1 billion. You could easily spend 10 basis points. How about the last time you sold your house? What's the transaction fees to sell a house to someone else? And how long does it take, by the way? Right. So when you think about it that way, like, if I could sell my house in 30 days and it was $1 million house, would I pay 1, 2, 3, 4% interest or in fees? Yeah, I would. If I paid 1% fees, I think that's cheap. Well, 1% fees on $1 million transfer of Bitcoin, right? That's going to support the network. So the beauty is, I don't think the transaction, I think Bitcoin's always going to be 100 times to 1,000 times more efficient to transact in than other instruments. But I do think there will be transaction fees. I think the fees will support the mining network. And the mining will continue forever because there's always going to be stranded energy and there's always going to be stranded capital. And so if you're sitting at the edge of the grid and you have a dam in the Himalayas, well, you're going to want to run Bitcoin mining with the dam in the Himalayas because that's the highest bidder for your electricity.
You're saying that'll get us to the end of the blocks themselves, but when
no, I'm saying that'll go on
about
forever. I mean, the transaction fees will go on for 1 million years.
I see. You're saying that there will always be somebody willing to do the work for the securing of the network based on that's the highest bidder for the electricity.
There are no block rewards for selling houses. Why is there a real estate industry? They're all based on transaction fees. Why do banks give you mortgages? Because of transaction fees. You see?
But what about gold? So when I think about this as a static thing that I'm using to store my capital, you just think that there's going to be enough once it's global. There's going to be enough reason for enough people to be selling their long-term capital assets at any one time that we're still going to have a constant desire to have those 5,000 blocks filled.
I'm saying that the airlines operate on transaction fees. And if people decided they didn't want to go from New York to Singapore, I guess there would be no airline from New York to Singapore. And I'm saying that if I have $1 billion of capital and a bank in Singapore wants to borrow that capital, or they want to lend me $1 billion of capital, I will be happy to pay a transaction fee to move it from their bank to my hands. I'm saying, why do Visa and MasterCard work? They charge transaction fees. So what I'm saying is everything in the finance industry runs on transaction fees.
So what I'm hearing you saying is that you don't have a concern on that because ultimately you think there's going to be enough velocity of transactions that transaction fees are going to handle it, and anybody that's paranoid that there won't be enough movement, they're just incorrect.
Of course. It seems obvious. It's like saying, well, how about every other service on earth? They all run on transaction fees. Right? So what's the most important service you could offer, right? The service of moving money? I mean, everybody pays fees to move money. It's a massive business, right? Visa, MasterCard, the worldwide banking establishment, it's all based on fees, all of it. So yeah, I mean, I think when you get to the point where you have trillions and trillions of dollars of capital, then people are going to pay a fee to do the transaction. We do it now. When I buy Bitcoin, I have to pay a fee to receive the Bitcoin. Then I have to pay another fee to move it in cold storage. If I ever want to sell it, or if I ever want to pledge it, or if I ever, want to do anything with it, I have to pay a fee to move it on the blockchain. So transaction fees are going to continue, right? People
All right.
are
What
going to
about
trade
quantum
property.
computing? You mentioned that earlier. Do you think that as quantum computing rises up, because recently Google made the Willow announcement that it's able to run computation so much faster, will Bitcoin simply adopt a new security protocol? What will that look like?
I think that was a marketing announcement by Google. I mean, there doesn't seem to be any single practical application for the benchmark. So they created a quantum benchmark. They announced that they perform well on the quantum benchmark, but there's not any useful application for it anywhere in the world, right? That's the first observation. So you might be getting concerned, but no one's come up with anything they can do with it. So my second observation is, if you create a powerful computer, the very obvious thing you could do with it to make money is to mine Bitcoin with it. And so the first place to use a powerful computer is to mine Bitcoin, which increases the security of the network. My third observation is, if you really come up with a computer powerful enough to crack cryptography, the first thing you're going to crack is Google itself, right? Do you think that Google would sell a computer that destroys its own network? Which is kind of ironic to me, right? Like, that's also the acid test, right? If you're going to crack the cryptography, you would actually crack the networks that Google, Apple, Amazon, Microsoft run, and then you would crack every single government network and every banking network. And if you could crack all those networks, you wouldn't need to steal the Bitcoin. 99.9% of the stuff in the world isn't in the Bitcoin network. So if you hype it, and I don't think Google is selling such a device, right? I don't know what'll happen, but the entire thing is a little bit of a parody to me. If we just,
because you never think it's going to happen, or because Bitcoin is nimble enough that when something like that happens, they'd be able to adopt a new security protocol?
What I'm saying is, all the existing news is just climatology alarmism, where someone is saying, I invented a hyper powerful computer, and then it's being used by an entrepreneur to market their new quantum token. Like,
I mean,
the
I get that
number
in the
one
short
use
term.
of it, well, that's why we're talking about it, right? The number one use of this is to actually market a yo-yo token that someone has, that has a quantum resistant algorithm, and they're hoping you think that the quantum threat is a threat. I'm just going to indulge the fantasy for a second. Let's say sometime in the next 30 or 40 years, or whenever it happens, someone comes up with a powerful computer, which we will call a quantum computer, which actually does something useful. And the useful thing is it cracks cryptography. Then I would acknowledge it's a problem for the human race. It's a problem for every government, every company, every individual. Because if I really can crack cryptography, that means everything that's digital in your life is now at risk. That means I can launch, nuclear weapons. That means I can take over the government. That means I can have the Interpol kick your door in and shoot you with a fake arrest warrant, right? So the point really is, all of civilization breaks down into chaos if Dr. Evil gets the hypothetical quantum computer that really does work. Let's imagine that threat. What's my response? The response is obvious, which is every computer scientist on the planet has a vested interest in upgrading the cryptography that we use to secure our networks and our systems. We will do that. If the quantum computer, the quantum chip that Google offered actually threatened cryptography, Google's own engineers would be releasing a set of upgrades to their own encryption, and they'd be huddled with Microsoft engineers right now, because Google and Microsoft would be the two biggest losers And if they didn't, Zuckerberg would be doing it at Meta. So ultimately, it's not a Bitcoin specific thing. It's a human race specific thing. And let's just reframe it as, what happens if we come up with a computer that can break our current SHA-256, techniques, or our current cryptography? And the answer is, we're going to upgrade it. We'll upgrade the software. Bitcoin is at its core, it's a protocol, like English, like math. If I come up with a way to hack your phone and send a message from you to the government saying you're going to topple the government, I have corrupted your communication technique, but you're not going to abandon English, are you? Right? And if I come up with a protocol to basically put false numbers into your database, that doesn't mean you're going to abandon base 10 math. I mean, Bitcoin is a bunch of honest people, smart money. They all decided that they were going to store their money in a bank in cyberspace that they trust. The bank is getting upgraded all the time. The software is upgraded every year. The hardware is upgraded every year. And so the implementation of the protocol will change over time. And if there is a quantum threat, we will react to the quantum threat, just like if you were to go to the Microsoft shareholder meeting and said, hey, I heard Google just released the quantum chip and it looks like it's going to crack your cryptography, and therefore should I sell my Microsoft stock and buy quantum yo-yo stock? I bet you Satya Nadella would say, no, don't buy quantum yo-yo stock because it's an overdone fear, and quantum yo-yo doesn't actually have the support of every company on earth and doesn't have a multi-trillion dollar market cap, and it doesn't have all of our engineers, and everybody on earth hasn't decided to standardize their office products on quantum yo-yo whatever stock. They're using Microsoft. Don't worry, we're adults. If it does become a threat in the future, we'll upgrade our software to deal with the threat when it happens. For now, the reason people buy Bitcoin is it's better monetary protocol. And the reason that they use Google is it's a better search engine. And the reason they use Microsoft is it's a better enterprise software suite. All three of them have to deal with this uncertain thing we call the future. And I think that they'll probably figure it out. If they don't figure it out, right, then they'll be replaced with something better. But I put my money on Bitcoin first because the protocols, whether it's the metric system or the English language or base 10 math or Bitcoin, those protocols, they're the most durable thing in the human race, and they will outlast the companies and the countries.
All right. Makes sense. I want to talk more about the U.S. strategic reserve, doing that in Bitcoin. If you had time to sit down with President Trump, what exactly would you advise him to do?
I would say that money decomposed into currency and capital. The US dollar is the world's reserve currency. Bitcoin is emerging as the world's reserve capital. Gold used to be the world's reserve capital network. Gold became ineffective in the 20th century. Bitcoin is becoming the digital gold of the 21st century. You understand gold and you understand digital gold. If you want the US to remain the world's greatest power, the economic leader, then your agenda ought to be economic and technical leadership. That means create a regulated stable coin, make it possible for a US bank or a US company to issue a dollar-backed stable coin like Tether, like Circle. Create a regulatory environment, a digital assets framework, if you will, where Tether can relocate to the US, and then expand the stablecoin market from $150 billion to $10 trillion. and you will create $10 trillion of demand for U.S. treasuries custodied in a
How do you
U.S.
do that,
bank.
though?
The demand, how do you create the demand? To create the demand because there's $10 trillion of stable coins issued. The reason there's $10 trillion of stable coins issued is because American companies can do it. Are you asking why will people want to buy the stable coin?
No. I'm saying how are we creating the stable coins? Are we locking up, are we backing it with securities, treasuries? Excuse me. Are we talking about money printing?
What I'm saying is the U.S. should create a law that allows a U.S. bank or a U.S. corporation to issue a U.S. dollar stable coin like USDC or USDT and back it with U.S. dollar equivalents. The definition of the stable coin would be you have to hold U.S. dollar equivalents. That would create the demand for $10 trillion of U.S. treasury bills. Right? The big idea here
okay,
is...
so let me say it slightly differently, make sure I understand. You're saying if you back the stable coin with treasuries to the tune of $10 trillion...
No, I'm saying you define the law so that you have to do... It's not an if. It's the definition of digital currency is a token pegged to the dollar backed by U.S. treasuries. That's the definition of the currency. That's what the government should do.
So stable coins are by definition tied to treasuries.
Not now. Like what I'm saying, you're asking me what the government should do. And what I'm saying is the government should create a law that allows U.S. companies and U.S. banks to issue stable coins. And the definition of the stable coin, a stable coin is a digital currency.
Yep.
The definition of the digital currency is a token pegged to the dollar, backed by U.S. dollar equivalents sitting in a U.S. bank. That's missing right now. That doesn't exist. The reason that Tether is not in the U.S. is because it is impossible for Tether to come to the U.S. and do that thing. If the U.S. did that, then the stablecoin float would go from 150 billion to $1 trillion to 10 trillion. And the US dollar would become the world reserve digital currency on every iPhone and every Android phone and everywhere in the world. And
so I know if I'm going crazy, are you picking numbers just sort of randomly, or is there math that backs up it would go to 10 trillion?
That's what I think it would do. That's the demand for that asset, 10 trillion. Because there's $900 trillion of wealth in the world. We could go back to the Croesus chart. About 450 trillion of it is for assets held for use, for their use case, and the other 450 trillion is store of value. But you can see it's pretty easy to get to 10 trillion. Are you suggesting that's too much or too little?
No, I'm just trying to track whether that number is tied to something that I should already be aware of, or if you're just giving an example.
It's 1% of the global economy, right? 1% of the global economy wants to be a medium of exchange in the dollar. Yeah. So we can stipulate it's my opinion, if you like. You asked me what advice I'd give the administration, though, so I'm giving you my advice, which is you want the US dollar to be the world's reserve currency, and you want the US to own the world's reserve capital network. For the US dollar to be the world's reserve digital currency, if you want to be the world's reserve currency and you want to cement your control for the next 100 years, then you want the US dollar to move at the speed of light on billions and billions of devices. Okay, how do you do it? You need a stable coin backed by US dollar equivalents. Who should issue it? A company in the US. Either a bank or a public company like Circle, right? And how do you ensure it's good for the dollar? Well, you just make sure that it's pegged 1-for-1 to US dollar equivalents. Now let's go to Bitcoin. Bitcoin isn't medium exchange. It isn't the currency. It's capital. It's digital gold. What the government ought to do is sell their gold. They have $600 billion of gold. They ought to just sell it and buy Bitcoin with it. And you could buy 20 or 25% of the Bitcoin network with the proceeds from selling the gold. The goal ought to be for the US just to buy 4 or 5 million Bitcoin. After you do that, you've demonetized the gold network. So the gold network is the 19th century world reserve capital network. You might as well just sell it all. The people that will own it will be the enemies of the United States. And the gold network will go from being worth $20 trillion to being worth $4 trillion or $3 trillion. You'll just drive it into the ground. Gold will go to $200-300 an ounce. And anybody holding gold as a reserve asset is bankrupted or has a worthless rock, just a shiny, heavy rock. And you're buying Bitcoin in the swap, and then Bitcoin goes to hundreds of trillions of dollars a coin, and you end up with $50 trillion to $100 trillion of capital. And then what happens to the U.S.? The U.S. becomes the economic leader of the world for the next 100 years. We're the richest country in the world. We negate the entire debt. If you generate a $50 trillion capital gain with Bitcoin, you offset the existing national debt, and you become a net creditor nation, and the dollar permeates everywhere. Okay, what's going to pay for this, Tom? Well, first of all, everybody with CNY or rubles or any African currency, any South American currency, even the euro, they're probably just going to trade all their currency for the US dollars, for the digital currency of the US. Second, anybody with capital assets outside the US that can't get access to the dollar to capitalize their company, they're going to use the stablecoins to capitalize their entity. So you're going to have capital flows from currency, and you're going to have a lot of other capital flows. There's a lot of people in the world, in Cuba, in Venezuela, in Argentina. They would sell their real estate. They would sell their equity. They would sell their currency. They would sell their bonds just to buy the US dollar. I mean, that's been proven in Argentina. That's been proven in Turkey. That's proven in Lebanon. So you'll have a lot of currency, a lot of money just flow into the US dollar via the stablecoin. And by the way, an anecdote is, in Europe, if Europeans are given a choice between the digital euro and the digital dollar, they 99% of the time choose the dollar. That means people in France and Germany and Italy and Greece want the dollar. Now, if I go to China and I give them a choice between the digital CNY and the digital dollar, the vast majority of the money chooses the dollar. That's why it's illegal. That's why the Chinese have a law making it illegal for you to trade crypto, because everybody wants it so bad, they would all buy it. So we're talking about economic physics now, right? Capital flow, money, water flows downhill and money flows to its most secure, best home. So on the capital side, with regard to Bitcoin, what would happen is, everybody in Africa, South America, Asia, they would all dump their physical assets and their low quality bonds, currencies, real estate, equity, and they would buy Bitcoin, because everybody would rather have a piece of cyber Manhattan. They would all rather be in the US. They'd all rather have the high quality property, but they can't buy it. They can't physically. It's illegal do you know it's illegal in Nigeria for you to hold dollars?
I did not.
There's a lot of countries, it's illegal in China for you to trade in US stocks or buy dollars. So there are a lot of places you can figure it's probably illegal in Russia too, right? I think most places in the world, they have capital controls, and the capital controls can range from you can't take your money out of the country to you can't even hold those foreign assets.
And do you think that Tether or something like that lets them get around those regulations?
That's why Tether is successful today. The reason that Tether is $100 billion plus network is because people want dollars so bad, they're willing to buy it from a company that isn't public, that isn't a bank, because they want the dollar, right? If Tether were allowed to incorporate in the U.S. and operate in the U.S., it would probably go from $100 billion to $1 trillion network in a hurry, right? But there'd be competition. Let them compete with Goldman Sachs and J.P. Morgan and Circle and whoever, and may the better company win. But the point I'm getting at here is the capital from the 20th century is going to flow into the 21st century. People are going to sell gold and they're going to buy digital gold. They're going to sell antiquated real estates and aged apartment buildings and natural gas fields, and they're going to sell soybeans or whatever in Siberia, and they're going to buy 21st century assets. And that means Bitcoin, among other things. And then capital in foreign nations is going to flow toward the West, and it's going to capital will flow from the East to the West, and it'll flow from Europe to the US. And the only reason it doesn't is because we don't make it easy for the money to move. And the way to make it easy, embrace Bitcoin, and anybody can buy Bitcoin anywhere on the world. There's 15,000 crypto on-ramps, and you can do it peer-to-peer. So embrace Bitcoin, and that is a capital network that the United States would own and benefit from. And all of the capital from your enemies and all foreign capital and all antiquated capital and all inefficient, thermodynamically unsound capital, it would all flow into the Bitcoin network. And if we issued that digital currency, that stable coin, then all of the world currencies would immediately swap to the dollar for all except for their next 4 weeks of cash flows, because everybody wants the dollar everywhere outside the US. And so this is an example of leading through a digital assets framework, right? And the two most important digital assets in the world are digital currency in the form of the dollar and digital capital in the form of Bitcoin. And the Trump trade is, I just swap the gold for the Bitcoin and I make $80 trillion in the trade, and I catapult the United States to worldwide economic dominance for the next 100 years. That's the advice I'd give you.
Very good advice. But given how many people in the US hold gold, what do you think the odds are that he'll actually do that?
I don't know. But it doesn't, the gold is the last twist. The reason to sell the gold is because foreign central banks and the competitor to Bitcoin over the long term is gold. So the entire trade becomes free and it becomes geopolitically wise, because not only do you enrich yourself with an extra 100 trillion, but you also bankrupt your enemy's banks. So that's why you should do it. But will they do it? Maybe not. But the fallback would be you keep the gold. By the way, gold's getting demonetized whether you like it or not. Like, I will just say, gold is failing as a capital asset. It'll either fail because a nation state puts a stake in the heart of it, or it'll fail because the free market's going to short sell it. I mean, every rational investor that holds gold is going to dump the gold to buy Bitcoin every year. So it's going to be demonetized no matter what. So the reason to sell it is because it's a bad investment and it's happening anyway. But let's say that they don't. Well, you just use $600 billion of US dollars or borrow $600 billion to do it. It still becomes effectively a free transaction. You're going to borrow $600 billion and you're going to pay off $40 trillion, or you're going to make 60 to 80 trillion. So it's a pretty obvious swap, even with just currency.
And would you be perfectly happy to see them inflate the money supply to do it?
Yeah, as I said, I mean, if you're buying the Bitcoin before it goes up by a factor of 100, it's not inflation, it's accretion. Right? You could spend $1 trillion to buy the Bitcoin and make 100 trillion, and it's 100-to-1 gain. So if you look at the history of the U.S., we actually bought Louisiana from Napoleon. I think it was like whatever, 12 or $15 million. We bought Alaska from the Russians for $6 million. We bought California from the Mexicans for $12 million. There was inflation to do that, or they just paid with a check or currency. They were all good investments. New York was bought, but what, 60 guilders or something, nothing. Yeah, so I think that look, the point I'd really make is you as an individual ought to borrow money against your house and buy Bitcoin. If you're borrowing the money at 6% or 3% and investing it at 30 to 60%, it's a good idea for you. If you could sell 10% of the equity in Impact Theory, the corporation, at a fair value, I would say inflate your equity, sell 10% of your stock, buy Bitcoin with it, because Bitcoin's going up 30 to 60% a year. In the worst case, you'll have diversified. In the best case, you'll actually grow faster. And the first nation to print money, the first nation to print their own currency to buy Bitcoin wins. Right? Like, Tom, look what MicroStrategy did. We basically issue our own currency, our stock, and we buy Bitcoin. What happened? We went from $1 billion to $100 billion market cap is what happened. Is it inflation? It's only inflation if you print the currency to invest, to make a bad investment, right? If you print the currency to buy something that's appreciating faster than your inflation rate, it's actually accretion, right? So the hurdle rate is the 7%. And the problem generally is most governments print the currency to make a poor investment instead of printing the currency to make a good investment. And that's why they can't get out of their hole.
When you look at the hole that we've dug for ourselves and the adding $1 trillion every 100 days to the debt, do you see this as like a no-brainer way to get out of that?
Yeah, I do, because you want to grow your way out. You don't want to tax your way out. Austerity isn't a good idea. Tax isn't a good idea. What is this, the way you get out? Well, if we create 1 billion robots and 1 billion AIs and they all do the work, smarter, faster, stronger, cheaper by a factor of 1 million, then that's probably good for the economy, right? I mean, you're going to harness digital technology, and that's going to help us grow our way out. If you remember what I said at the beginning of the podcast, and I said it's a 10 to 15 trillion dollar entropic lapse every year due to physical and financial capital. So you're saying, how are we going to pay off a 30 or 40 trillion dollar debt? What I'm saying is, I have a network that's worth trillions of dollars a year, maybe 10 trillion a year. And so if you actually install the network, it's worth $10 trillion a year to the human race. How long does it take running a thing worth $10 trillion a year to pay off a $40 trillion bill? It's like, what I'm coming back to is you have a problem, and I invent a modern fusion reactor, a pocket fusion reactor that will run for 1 million years and give you infinite power, from a bottle of water. And I offer it to you, and you're like, no, I'd rather just tax everybody to death. Like, I think that if you're smart, you figure out, we'll just take a few of these, and this is how we're going to grow our way out of our problem. And I'm offering you the same thing, a crypto reactor. And I'm saying the solution to our economic problem is harness technology to generate trillions of dollars of economic value a year. The conventional thing that everybody understands is creating $1 trillion worth of new products and services that didn't exist before. Right? I got to produce more candy bars, more cars, more planes, more trains, more travel, more concerts, more buildings, more houses, more. That's conventional. That's the P&L side. Robots and AI will help with that. But the unconventional, the monetary, the economic side, the very deep paradigm shifting idea is, here's my idea. Eliminate the toxic capital from the civilization that's destroying $10 trillion a year worth of products and services. The average life expectancy of a human was like 30 when we drank dirty water and we had dirty food and we had dirty air and we had dirty blood and we had doctors with dirty instruments and everybody's just dying. And you can't grow your way out of that with a better factory. But if I come along and say, this is clean water, give this to your kids, they won't die. Okay. It's the taking away of the germs from the food and the water that makes you live twice as long. Bitcoin is about taking away the germs, right? The toxins from the capital of the civilization, right? When
And
you
what do you
see a
think is the
crumbling
most
building,
devastatingly, okay, is that, I was going to ask what the most devastatingly bad capital is.
it's just all imperfect, right? Like every hyperinflating economy, go to Africa and ask, why are they poor? They're poor because all the capital is toxic. What about the Weimar Republic? What happens when the capital collapses? Okay, the government collapses. What happens next? Nazi Germany. What happens next? World War II. Okay, 100 million people eventually die, right? So the crumbling capital creates a crumbling civilization. Every single civilization for 10,000 years, everyone in recorded history has as one of its root causes, the capital crumbles, the monetary system collapses, and then what happens is they can't feed everybody. So then what happens is the people complain, so the soldiers kill them. Then what happens? Well, eventually you can't pay the soldiers, and the soldiers mutiny because they're not being paid. And then what happens? The people that pay their soldiers come over your border and defeat you. And then the historians write, oh yeah, the barbarians came and they toppled our civilization due to no fault of our own. But the fault was the capital crumbles.
Agreed, but you're dealing with countries that want control. You've talked about China won't allow you to transact in dollars. A lot of these places want to make sure that you're using their capital. So even if Bitcoin is this perfect system, why won't it hit an immune response from these nations that want control?
They will. Bitcoin's not going to solve the world's problems. What I'm saying is, if I give you clean water, it solves a bunch of problems. If I give you electricity, it solves a bunch of other problems. If I give you clean food, right, healthy food and sterile jars, it solves a bunch of problems. Even in the civilizations you don't agree with, I think you would agree that if we turn off the electricity, they have a problem. Right? If I kill the water and the power in New York City, everybody's going to die. It's just that simple, right? I mean, so what I'm proposing is we inject digital energy into the civilization. Bitcoin is digital energy. It's digital capital, right? And I'm telling you, I think it's worth $10 trillion. And I'm saying, if you have an economic problem, if you were running a factory and you were in debt, and I came to you in 1900 and you said, well, Mike, what should I do? I'm thinking about cutting the wages of all my employees, making them work twice as hard and whipping them occasionally, and then barking at the customers and denurturing the product because that's what I need to do to stay in business. What do you think? I would say, well, Tom, I'm an engineer. What I think is I'm really interested by what this Edison guy is doing with electricity. And I think you can rip out the coal powered steam engine in your factory and maybe electrify it. And then I think you ought to look at what Henry Ford did with the assembly line and the internal combustion engine. And maybe instead of whipping the people in your horseless carriage buggy whip factory and then, and then begging a politician to buy your buggy whips and your horseless carriages, maybe you ought to invent a car, and maybe you ought to do it with electricity, and maybe you ought to use this physics, and then maybe it'll be such a delightful product that, demand for the product will go through the roof. And that's what I think about this. I think that Bitcoin is a digital technology that solves an economic problem that's worth trillions of dollars. I don't think it cures cancer. I don't think it'll stop wars. People had wars after electricity and clean water. I'm just pointing out that Henry VIII dies of gout because he didn't have clean water. And of all the things that Henry VIII would have liked to have bought with all of his power, and he was the most powerful man in the UK, he would have liked that, right? This thing we take for granted, this thing that makes us go from living 32 years to living 80 years. Clean capital, clean money, digital money, high frequency, programmable money. It is a protocol for prosperity. And I think that if you're looking for a politically sound strategy, the most politically sound strategy is not to tell people that austerity is the solution or bludgeon them to death. It's just to introduce a new technology that delights and enriches everyone and spreads like wildfire. And I think Bitcoin is spreading like wildfire. Just like if it's a good thing, whether it's the internet or an iPhone or clean water or air conditioning or an automobile, you don't gotta bludgeon people. You don't gotta bark at them. The average person looks and they know why they want to drive in a car or fly in a plane or have air conditioning. I mean, I live in Florida. All of Florida is due to air conditioning, right? The entire state wouldn't be here without electricity and HVAC. And that is my contention with regard to digital capital. I think that the world's full of problems, but half of them are economic problems. And if you want to solve your economic problems, solve it with technology, which is egalitarian, utilitarian, right? That is nonpartisan. Because no one can agree on religion and political issues, but they can all agree that they would like to be more powerful, more prosperous, more comfortable, more capable. And generally, the only countries on earth that are anti-technology don't last long. You know, remember the Japanese, they denied gunpowder. That didn't work well. The Chinese tried to keep guns out of China. That didn't work well either. I mean, eventually, you know, technology is coming to your shores. And if you resist it, you know, your government's going to collapse and your ideology is going to collapse. So I think this is a very straightforward, practical approach to making the world a better place.
Yeah, agreed. I don't think it will be adopted as such. So it'll be interesting to see the war of the powers with different countries taking different approaches. I'm certainly encouraged by Japan. Seems like they're contemplating having a strategic reserve of Bitcoin. That's amazing, especially given the economic troubles that they're having. But here in the US, what do you think about David Sachs? Is he going to be somebody that's in the president's ear, that's pushing this agenda? Have you heard him talk about this issue?
I don't think there's anybody better qualified to do that job than David Sachs. I think he has extraordinary good judgment with regard to economics, human behavior, technology, right, and good intentions for the U.S. and the world. So I think he'll be great, and I think that in general, the leadership that's in the incoming administration is very pro-technology, pro-freedom, pro-property rights, pro-entrepreneurial, and pro-innovation. So I think that it's a good team, and I'm very optimistic.
Have you spoken to Sachs directly?
I talk to a lot of people, but I don't share what I say. So it's in confidence.
Yeah, very fair. I certainly think we have a sense of how you would be approaching this. What do you think about Japan and what they're doing? Do you think that they'll move forward with that? Do you think that they have any other way out of the situation that they're in? And could Bitcoin be the solution to their whatever 40-year stagnation?
You know, I think that adoption of Bitcoin, it starts with retail, then investors, then small corporations, then larger corporations. I don't think large governments will adopt it first. I think small governments will adopt it, but primarily it'll be adopted at the institutional level next. So, and I don't really think it's even necessary. I mean, I'm not holding my breath for that. I think that there are examples like Metaplanet in Japan that are Metaplanet. I think is the #1 stock on the Japanese stock market. They're going to get noticed, and I think people in Japan will start to learn about Bitcoin. But it'll be a solution for the individuals and the families and the investors. And then it'll be a solution for the companies long before it's a solution for the country. Governments are normally the most conservative actors and the last to move. You know, just like any technology, right? Think about how all technology propagates. Your iPhone, your web browser, your electricity, or whatever. It starts with the early adopters, the innovators, and then the small companies and the startup. And the big companies, they dismiss it. And then eventually the big companies get threatened by it. And then they embrace it. And then after that, it ripples into government. But it's government normally when they try to do something, they're a little bit slower than normal.
Yeah, it'll be interesting. Do you think that the red wave here is going to buck any of that trend in the US? Are we going to see a pretty gross acceleration in adoption of anything innovative? Or do you think that we'll get bogged down in the normal quagmire and the traditional system will still make it a slow?
I think that the US is now actually the worldwide leader in digital assets. I mean, we're going to catapult from being, 25, 30% of the way back from the pack, in the middle of the pack. We're going to catapult to #1 because most of the rest of the world is fearful of innovation if they're fearful of getting ahead of the US. So even if it's a good idea, like all the ideas I just laid out, I mean, and a digital assets framework is a great idea. I think that other countries would be afraid to adopt a good one if they thought the US was more regressive. So now I think very progressive digital assets ideas will get adopted by the US. And I think the US has the economic capability, the financial power, the political power, and the technical power to commercialize all those. So at this point, the US has gone from being right in the middle and not very progressive to actually being #1, the greatest opportunity. I do think it's quite likely in the next 4 years, we'll have an incredible crypto renaissance in the US. And as I just pointed out, I really think the US is positioned to dominate digital currency and digital capital. And it's a $10 trillion opportunity on the currency side, and it's a $100 trillion opportunity on the capital side. I don't think any other country has an opportunity that big. I think the US is really in the pole position at this point. And before November 5th, if you thought it was going to be a blue wave, you would have thought there won't be a digital assets framework, and the US is going to grudgingly accept Bitcoin, but they're not going to embrace the other ideas. But after November 5th, I think now it's more likely than not that we will get a digital assets framework. You will get digital tokens, digital securities, digital currencies, digital capital, digital exchanges, and the US will be the big winner in all those things. That's what I think now. Not without some political maneuvering back and forth and some negotiation and compromise. But it seems the writing is on the wall, and the path of least resistance right now is the creation of a multi-$100 trillion digital assets ecosystem and a multi-$100 trillion digital capital ecosystem as part of it. That's what I expect.
Now, when you talk about the people that are really going to get this, or people that understand economics and physics, somebody like Elon, who certainly, maybe he understands economics, maybe he doesn't, but certainly understands physics, still continuing to, at a minimum, sort of troll with the idea of Doge. Are you surprised at all that he, for a minute, seemed to be really into Bitcoin, had it on the balance sheet, seems to have moved away from that? Peter Thiel has also moved away from it. What's your take on Elon specifically and Bitcoin?
Well, there's a lot of things going on in the world right now, right? There's 100 different industries, and there's a lot of dynamic questions, right? So solving the problem of space travel, and solving the problem of electric cars, and solving the problem of satellites, and solving the problem of government efficiency, and solving the problem of free speech, and solving the problem of digital capital, and solving the problem of digital currency, and solving the problem of war, and solving the problem of medicine, and solving the problem of health, and solving the problem of overregulation, and solving the problem of overbearing capital markets, and solving the problem of climate, and solving the problem of fill in the blank. I could go on for another 100 problems. That's a lot of problems. I think this administration has the greatest number of problem solvers we've ever seen. I think that Elon is the number one sponsor of Bitcoin and the Magnificent Seven. I mean, if you look at it, right, take the top 7 companies in the world. Okay, which one has Bitcoin on the balance sheet? Tesla, right? So truthfully, Elon is the leader in understanding digital capital, on the base. Tesla has Bitcoin, SpaceX has Bitcoin. So I think Elon's been a great advocate, but so is Vivek, Ramaswamy, and so is I think David Sachs understands this, and I think the Secretary of the Treasury, Scott Bessent, and Atkins, the head of the SEC, and Trump, both Donald Trump and Eric Trump, and Howard Lutnick, the head of commerce. So I think that you've got a lot of people that understand it. I think if you're parsing people's words and saying, did they say the perfect exact thing? Like I don't talk about the other 99 things. I don't utter my opinions on health and vaccines and foreign policy and the like, because you might not exactly parse your words correctly, or there might be someone that spent 100x as much time as you that's a bit more nuanced. So I think it's inevitable that when you are asked to opine on 100 subjects, you'll occasionally say, you'll communicate with a precision that leaves you open to criticism from someone, but I don't really get worked up over it. I think that we've got a good team right now, and I think that they understand the need for digital transformation, for innovation, and they will pursue it as effectively and as rapidly as they can, subject to the constraints of God and man.
So at the risk of getting you to comment on something that you don't have enough time looking at, as you look at the first, call it 18 months of the Trump presidency, what to you would just be an unbelievable win if they actually got across the finish line? And whether that's dumping gold and buying or getting in place a strategic reserve of Bitcoin, or simply making a statement about we're never going to sell, what would a real victory look like in the first 18 months?
I think a digital assets framework will be a huge win. It'll bring the entire digital assets industry to life, and it'll.
And is that from an SEC perspective? Like, hey, here's exactly what you can and can't do?
I think if they have a digital assets framework, that's a big milestone. If they put in place a much lighter regulatory environment, if they remove a bunch of crippling, overbearing regulations that prevent entrepreneurial activity, that make it very difficult for companies to do anything, I think that would be a big win. And and then beyond that, avoid placing a crushing burden on the capital markets or on free markets, so that people can move about and fix the problems in the world. I think that all of those things are quite possible. They'd all be good in the first 18 months. They'd be great for the world.
And what do you think is going to be the intersection of AI and Bitcoin specifically?
AI represents digital intelligence. It's going to go into every product, every service, every company, everything. It's going to permeate everything in the economy. The result is there are going to be very valuable companies. And I think those companies, as they get more valuable, are going to buy Bitcoin. I think AI is going to fuel the capital market, so it's going to create lots of capital, lots of productivity, and I think that will flow into Bitcoin. And I think long term, the AIs will want to move money at a much faster speed. They'll want programmable, high frequency money, and that'll be Bitcoin. And so I think that the growth of AI systems will result in demand for digital capital directly from the AIs and indirectly from the companies that create the capital. I think it'll drive both of those. And that would be my first order and second order impact. There are some other possible things that could happen with AI, but they're more speculative. And I think those first two things are the things that drive multi-trillion-dollar impact on the capital markets.
I love it. Michael, every time I get a chance to either research you or spend time with you, it is absolutely mind-blowing how many more pieces of the economic system I begin to put together. Where can people follow along with you, learn more about what you're up to?
I post everything every day on X, Saylor, Saylor. And so if you want to follow me on Saylor. And otherwise, we collect a bunch of Bitcoin materials on hope.com, HOPE. And my personal website is michael.com. And I post a lot of my personal speeches on that, just michael.com. So those are the three logical resources if anybody wants to follow me or look at anything that I've posted.
Excellent. All right, everybody. If you have not already, be sure to subscribe. And until next time, my friends, be legendary. Take care. Peace. If you like this conversation, check out this episode to learn more.
You are being slaughtered and you don't realize it.
There could be a dollar crisis.
They're debasing the currency by 15% a year.
I mean, it is inevitable that it's going to happen.
But does that just mean that we're crazy and that it's going to be fine?
I'm not saying everybody is wrong. I'm saying that people that believe in Bitcoin